Everyone, today we are going to discuss how to prepare a current year balance sheet, opening balance sheet and closing balance sheet. So see here in the previous class we discussed trading, just like trading concerns, the non-trading concerns also prepares balance sheet. In trading organization, they prepare two accounts and one balance sheet. The first one is trading account, profit and loss account, and balance sheet. Same as a non-trading organization, it also prepares two accounts and one balance sheet, two balance sheets. That is, one is receipts and payments account. Next one is income and expenditure account. The third one is balance sheet, opening balance sheet. Fourth one is closing balance sheet. Opening balance sheet, why we have to prepare opening balance sheet means for finding out the capital fund. In opening balance sheet, we take the only opening balances of capital items. With that, we can find the capital fund. Whereas trading in cash book is similar to receipts and payments account. Trading in profit and loss account is similar to income and expenditure. The balance sheet also similar to balance sheet, which is prepared in non-trading organization. Similar qualities. So see, the balance sheet covers all those items such as assets. We know the current assets, fixed assets, current assets, cash in hand, cash at bank, fixed assets, machinery, buildings, land and vehicles, motor car, like that. Fixed means for a long game. Liabilities and capital fund. Liability and capital. Capital fund is similar to capital account of trading concern. Okay, non-trading concerns do not have formal capital like that of trading concerns. Okay, here the only difference is in trading organization, balance sheet has only capital, whereas in non-trading organization use the word capital fund. Okay, excess of income or expenditure means income is high than expenditure, it is called as a surplus. Indirectly it means profit. Capital receipts or receipts that are accumulated under the heading capital fund as treated as capital. Okay, for finding out the capital fund, we take only capital items which is shown on liability side of the balance sheet. So important points here. If receipts and payments account is given, we have to prepare income and expenditure. Then only we can prepare current year balance sheet. Sometimes the previous year balance sheet has to be prepared for ascertaining the actual financial position that helps to prepare the current year's balance sheet. So see here, this is the receipts and payments account. With this, we have to prepare income and expenditure. Later on, we have to prepare balance sheets. So already, as discussed in the previous classes, we know that receipts and payments account starts with opening balances of cash and bank and ends with closing balance of cash and bank. Okay, so see here, uh, receipts and payments account of a charitable trust for the year 2000. Okay, debit side is receipt side, credit side is payment side. To opening balance, cash 1000, bank 14,000. The net value is 14,000. Okay. To capital fund directly given, donation for clinic fund 6,000. To revenue receipts, So interest 30,000, rent 12,000, sundries 3,000, total 45,000. So coming to credit side, as we know that receipts and payments account takes all revenue and capital expenditure. Okay, revenue items and capital items. Capital payments, investments 10,000, furniture 4,000, clinical equipment total is 19,000. Next, by revenue payments, salaries 6,200, medicines 14,000, scholarships 10,000, printing etc. 800, traveling 1,000, total is 32,000. By balance carried out, cash 1,600, bank 13,000, net value is 15,000. Here is the balance, closing balance of cash, closing balance of bank, total is 66,000. So here additional information is given, so we have to we have to consider the above receipts and payments account and additional information, consider the two, and we can, with that we can prepare income and expenditure account. Later we prepare balance sheet. So see here what are the additional information is given. First of all, concentrate on that. The trust fund originally consisted of building valued at 1,50,000. 9% gout securities means government securities of the nominal value rupees 3,50,000, cost rupees 320,000, and the bank balance rupees 10,000. Bank interest receivable at the end of the year was rupees 2,500. Interest accrued on investments on 1199 rupees 3,500, and on 31/12/99 rupees 5,000. The trust owed suppliers of medicines of rupees 1,200 and rupees 800 respectively on 1199 and 31/12/99. Furniture on 1199 stood at rupees 3,000 in the books. We are required to prepare final accounts of the trust for the year 2000 after providing 2.5% depreciation book value of the buildings and at 20% on the assets. So with this information we have to prepare income and expenditure account and the balance sheet. So see here income and expenditure account of charitable trust for the year 2000. Already we know that only revenue items should be posted in income and expenditure account only for the current year only, that financial year or that particular year. To salaries, as it is the revenue item, revenue expenditure, the first column is expenditure debit side, second column is credit side. So as we know that salary is a revenue item, so we have to post it here debit side. As it is expenditure, it is posted on debit side, that is 6,200. Medical and surgical expenses also revenue item, as it is expenditure, as posted here 13,600. Next, scholarships, as it is revenue, posted in debit side, expenditure side 10,000. To printing etc., posted in debit side, it is 800. To depreciation buildings 21%, 2.5%, 3,750. Furniture at the rate 20%, 1,400. Clinical equipments depreciation on clinical equipment 20%, 1,000. Total depreciation on various assets is 6,150. So coming to credit side, by interest 31,500, as it is income as a revenue income posted here. Next, by rent, as it is revenue income posted here 1,200. Sundry contribution as revenue item revenue income. So posted credit side, that is income side, 3000. By interest accrued on bank deposits, income posted 2500. Then excess of income over expenditure means it is surplus. So 11,250. Total is 49,000. So see here, after preparation of income and expenditure, we have to prepare balance sheet. See here, balance sheet of charitable trust as on 31/12/2000. Liabilities, amount, assets and amounts called. Liabilities, trust capital fund balance 4,80,000 and donations, as it is a capital item, it should be added to capital fund, that is 6,000, total 4,86,000. Next, surplus. We got the surplus by finding out by solving the income and expenditure. We got that 21,550. Creditors for supplies 8,800. Okay, so coming to the asset side, we have to post fixed assets and current assets here. Posted and current assets here. Current assets and fixed assets. Buildings 1,50,000 less depreciation 3,750. The net value is 146,250. 1,46,250. Furniture 7,000 less depreciation 1,400. Value is 5,600. Surgical equipments 5,000 less the depreciation 1,000. The answer is 4,000. Investments 3,30,000. Current assets 7,500. Accrued interest 7,500. Cash 1,600. Bank 13,400. Total is 22,400. The total balance sheet value is 5,08,000. Like this, we have to prepare balance sheet. So see here, some assignments is there. So you have to solve the problem. Receipts and payments account of an amusement club for the year 2000 for the year ending 31st December 2000. So balance brought down, cash 60, bank 3,000, 3,060. Subscriptions, including subscriptions for rupees 2,000, rupees 150, total 9,000. As it is a revenue item, it should be posted in income and expenditure. Sale of old furniture is a capital item, posted in liability. Capital liability treated as sale of newspaper, revenue income, posted income and expenditure. Legacies 3,000 as a capital item, posted in balance sheet at the liability side. Interest on investments cost 20,000, 1,200. So as it is posted in revenue, income and expenditure, as it is revenue item, it should be posted in income and expenditure account. Endowment fund receipts 10,000, it should be posted in balance sheet. Proceeds from concerts, advertisement in the yearbook. So these are all posted in income and expenditure as it is a revenue item. So coming to credit side, salary of secretary As it is a revenue item, you have to post this one in income and expenditure and debit side, that is expenditure side. Honorarium expenditure posted in income and expenditure account as it is a revenue item. 4,450 wages as it is a revenue item. Expenditure, it should be posted in income and expenditure on the debit side. Charities, revenue income as payments as it posted in income and expenditure debit side. Printing and stationery, it should be posted in income and expenditure account debit side as it is revenue item. Postage, it is a revenue expenditure, it should be posted in income and expenditure debit side. Rent and taxes, posted in income and expenditure debit side. Upkeep of the land, posted in income and expenditure debit side. Sports materials, posted in asset side balance sheet. Okay, for this problem some additional information are there, you have to consider this additional information too. Current assets and liabilities on 31st December 1991 as follows. Subscriptions in arrears 1998 3112 200 3112 99 450. Subscription in advance 300 600. Furniture 2000 1080. Depreciation was 10,000 PA means per annum on the furniture left after selling a part of it. It was decided that half of the legacies may be capitalized. So, half of the legacies should be treated as revenue item and half of the should be treated as capital item. Okay, means half should be posted in income and expenditure and half should be posted in balance sheet. So, prepare income and expenditure account balance sheet as the day. So, some assignments. Okay, like that we have to prepare the income and expenditure account balance sheets. Okay, once again I am telling that, okay, as same as trading concern, in non-trading concern also we prepare some accounts. In trading account they prepare cash book. In place of cash book in non-trading organization we are preparing receipts and payments account. Both have similar qualities. Why? Because it follows the both follows the real account rule. Real account rule, that is debit what comes in and credit what goes out. This is the rule of real account. Okay, and the second one is in trading organization they prepare profit and loss account and trading account. In non-trading organization, instead of preparing trading and profit and loss account, we are preparing income and expenditure account. Both have similar qualities. Why? Because they follows the nominal account rule, that is debit all losses and expenses and credit all income side gains. Whereas coming to trading organization, we have to prepare balance sheet. In non-trading also we have to prepare balance sheet. In case of capital is the word used in trading organization. We use the word capital fund in non-trading organization. Instead of profit, we are using the word surplus in non-trading organization. Instead of loss, we are using the word deficit in non-trading organization. Surplus means excess of income over expenditure. Means income is greater than or higher than expenditure, it should be called as surplus. Normally in trading organization it is called as profit. As a non-trading organization we do not use the word profit. So instead of using the word profit we are using the word surplus. Same case we are using the word loss in trading organization. In case of non-trading we are using the word deficit. Deficit means expenditure is greater than or higher than the income, so it should become deficit. Indirectly it is called loss in uh, trading organizations. Okay, like this you have to prepare receipts and payments account, income and expenditure account, and current year balance sheet and closing balance sheet. Okay, thank you.